Hello traders, the title of this video is S&P 500 trading conflicted stock market faces moment of truth. Let's get started. We are on the monthly chart of the S&P 500, the Standard & Poor 500, a stock index that represents the market. So whenever we use the word trade first the financial market, we mean that trade the S&P 500. All right, so if you have been watching our video, you will notice that I always say that we are trading first the market and then the sector before the individual financial instrument. So also I've said to traders that if the market is turning from bearish to bullish, that's the best time to buy and hold in the stock market. So as you can see, in 2009 the S&P 500 was turning from bearish to bullish. So what was happening here, it break out of that declining channel and form the first higher low. Here it is, the first higher low here is indicating to us that the market is turning from bearish to bullish after the financial market crisis. So this is the signal to go into the stock market and start looking for bullish financial instrument one can buy and hold. Now, one will also sell and hold. Have I said, sell and hold? Yes. In the financial market, the big financial institution can sell and hold, stocks for some time, So when the financial market is turning from bullish to bearish, so when I'm using the word financial market, in this case, I'm referring to the S&P 500. So you may say to me, George, I'm a day trader. I don't want to know too much. So all I will say to you, if the S&P 500 is bearish or has exhibited a bearish trading setup, one should look for, one should focus on bearish, financial instrument. So one will always have a bullish watch list and a bearish watch list. So when we notice that the S&P 500, which is the market, is at a resistance zone or has exhibited a bearish trading setup, we will give priority to our bearish watch list. On the other hand, if the market, the S&P 500, exhibited a bullish trading setup or is pulled back to retest a support level, all right, that will constitute, we will give priority to our bullish watch list. All right. So going into the topic today, S&P 500 trading, conflicted stock market faces moment of truth. So I'm referring to one article that is written by Sue Chang, as a C-H-I-N, who wrote this article for marketwatch.com. It's a very popular financial market website that I recommend to traders. And there was an article titled "A Conflicted Stock Market Faces Moment of Truth as Earnings Loom." That article was written by Sue Chang. All right? So I'm going to quickly read for you that article. I'm not going to read the whole of it, but what is important for us for this tutorial about S&P 500. I agree with what Susan Chan was talking about here, because the market faced a moment of truth. So we will notice that, you notice now that if I go to the quarterly chart, all right, one quarter is already closed. So if you are a position trader, understand that the hedge funds, all right, the position traders, their favorite time frame is the quarterly chart. So anytime a quarterly candlestick bar is closed, decisions are made accordingly. So you can see that on my quarterly chart of the S&P 500, we have a quarterly candlestick bar that is closed. That's the first 3 months of this year, 2017. All right, the quarterly candlestick bar is close. All right. So after that quarterly candlestick bar is closed, we usually have what we call the earnings season. So company will be publishing their earnings. You can Google search, company earnings season. Okay, you can as for instance, I know that Microsoft, their earnings on the 27th of April, all right? So you can check for the company that you are trading, when are they releasing their earning. That will affect your day trading, swing trading, and position trading. Are they beating, okay, the analyst forecast, or have they failed to make to meet the analyst forecast? If they fail to meet the analyst forecast, usually it is a bearish trading setup. All right. If they exceeded, okay, the analyst forecast, that will constitute a bullish trading setup. I will be recording a video later on about the company earning and how day traders, swing trader, position trader can take advantage of that. All right. So going to the article written by Sue Chang, okay, about the conflicted stock market faces a moment of truth, which is true, and I agree with that. After being stuck in a state of suspended animation for the past few weeks. So if I refer to that sentence, you can see that the S&P 500 is confined in a triangle. This is what I've been telling traders since then, that the market is now in a triangle. So when a financial market or the S&P 500 is in a triangle, after a trending first, okay, in fact, we are in a fifth area wave for this, okay, mini cycle. We have a triangle. The triangle is a warning. I say, if you are a stock trader, you are an investor, okay, we have a triangle now. That's the green triangle on my chart. It's a warning. Now, the triangle, very often, trader will say, is a continuation pattern. But I prefer to tell traders to see a triangle as a warning, and most importantly, to think that anything is possible. So the warning is there, is the triangle. The price can break below it with a sharp correction down, or may break above it. That's why I say anything is possible. But most traders will say it's a continuation pattern, which means it will break above that triangle, retest it, and continue to go up. Until that time, one should be cautious. I'm not very bullish at this stage right now, all right? As an linear weight trader, I'm not bullish at this stage very much. But if he breaks above that triangle and retest it, we will give it a chance and use the top-down trading method to trade it up. But the opposite is also true. So one, even if you are very, very bullish, do not deny that the market is in a triangle, and one should not buy and hold like a crazy investor that will constitute a gambling in fact, all right? The intelligent investors are not gamblers. They take calculated risk, right? So this is what we are talking about here. So if the price itself, which is the number one technical indicator, has exhibited a triangle and warning to us that anything is possible, which means it can break below it. Usually after a triangle, we see a sharp correction, or it can break below it, a sharp correction down, or it can break below it, retest, and turn around. So anything is possible. So what Sue Chang is talking about here, so in those sentences, after being stuck in a state of suspended animation, I'm referring to the triangle, that's a suspended animation, all right, for the past few weeks. In fact, now the stock market will finally have its moment of truth, which means when companies start releasing their earnings, that will decide where this price action will continue, whether it's going to break down. If we have a lot of company failing to meet analyst forecast, the S&P 500 has more chance to pop below that triangle. But if you have more company, okay, exceeding the analyst forecast, well, then it's good news for the market, which means people will say, well, this bullish sentiment that was created since Mr. Trump was elected is still true. So companies are making more money. They are more buoyant to invest. So the market will go above the triangle. Until that time, one should be very, very cautious. Personally, what I would say to trader, even if he breaks above that triangle and retest it and one is buying, one should buy like a conservative market participant. You can quote me on that. So going back to the writing of Sue Chang, very beautiful article. After being stuck in a state of suspended animation for the past few weeks, the stock market will finally have its moment of truth as corporate earnings begin rolling out over the next few weeks. there will be a lot of riding on this earning cycle. So riding price. So if they are exceeding, okay, the analyst forecast, market speculator will be riding on those good news, which means the price will be going up. If they happen to be bearish, they will be riding on those bearish earnings. All right. So there will be a lot of riding on these earnings cycle. It will be the first quarter since President Donald Trump took office, providing a look at whether the euphoria that propelled major stock indices to a historical level was justified. So you have to understand that since Mr. Trump was elected, the market responded. It was a bullish sentiment. People were buying, were happy. Why? Because of the policy that Mr. Trump was talking about, building more infrastructure in the United States. That's job creation, businesses, okay, good news for businesses, cutting tax for businesses. All this has created, okay, a bullish sentiment, and major stock indices like the FTSE 100, the Nasdaq 100, the DAX 30, the CAC 40, and the S&P 500, the Russell 2000. All these major stock indices have benefited from those bullish sentiment, and they were going up. So this is what Sue Chang was talking about. So if you want to, I will try to put the article in the description section, so you may check it out for yourself. All right. So major stock indices were propelled to historic level. Okay. Now we want to verify after the earning whether those bullish sentiment were justified or not. It could also be the spark that rejuvenates the market, as investors have become increasingly cautious amid a sign that many of the pro-growth policy promised by the new president may be delayed. All right. So there are more to this article, which is quite interesting, showing exactly the sentiment, because we, as I told traders, the market is now divided into two groups. One group, which is the very smart investors that are very, very cautious, including the technical traders and the fundamental traders that are looking at this triangle. They are very, very cautious. They know that the market was going up for some time, and some area wave traders know that we are now in the fifth area wave. Will the fifth area wave be extended? So you will know that as an area wave trader, the fifth wave can be extended. So if we have a lot of good news, instead of having a normal fifth wave, we may have an extended fifth wave. But so far, a triangle is in place. As a day trader, at this stage, market is in a triangle. Look for stocks that are also in a triangle. All right? Look for stocks that are also in triangle and play the game of the triangle at this stage. A triangle is a consolidation pattern also. So when we are talking about consolidation, traders often think of a horizontal channel, but the triangles are also a consolidation pattern. So those who understand the ABCDE pattern that we talk about at 24elliotwave.com, which is the area wave triangle. We have 5 wave, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. It's a consolidation in a triangle. All right. So understand that we are in a consolidation mode, and the triangle, the way I draw it on my chart, I want to explain it to traders so you can do exactly on your chart. So select the month of March 2016, the low of the month of March 2016, and also the low of the month of December 2016. Connect those two low and have the first line, which is here, and then select the high of the month of December 2014 and the high of the month of March 2015. Connect those two lines and draw a line. You have the second line. And what I've done with the blue line, I divide that triangle into two. And if you look carefully on my chart, the S&P 500 is now touching, the median line of that triangle, all right? So there are other key levels that I talked about before at 24 Stock Trader YouTube channel, all right? In fact, I told traders, that this channel will be amazing, and a lot of traders do not believe me, and you can mark this video down if you don't believe me. But as always, when we are building a new channel, it's quite challenging and painful, to build a new channel. You are not getting enough view, and you don't have enough recognition for what you are trying to do. And at the same time, you are trying to to have a direction for your channel. So it's quite difficult because it's a new channel now, but we are working on it. As I promised, trader, this channel will be amazing stock market a trading channel, and one day you will agree with me. All right, hopefully. All right, so this is what's happening here. So we have it here. The price now at the support level 2344. That's the pink line here. There's another key level at 2402. All right, so do not ignore those key level. The price now sitting on the pink line for day traders. Okay, if you go to the daily chart, you can see that the pink line is there. The price breaks above it, it retested here, and it's also retesting the median line of that green triangle. So you see here, my triangle is here, as we are now sitting on it. All right, now on the daily chart, one more time, there's another triangle, smaller triangle on the daily chart. So I'm drawing it here. You see here, on the daily chart, we have another smaller triangle. All right, on the daily, I will leave it like that, and I can choose. Okay, I'll just choose this low here, and I'll connect it like this low here. Okay, so we have a triangle also on the daily chart. All right, so the warning is all over the place. All right, so if it breaks above this a triangle on a daily chart, retest it, go, okay, good. But if you are trading it, be always gently if you are buying, because we have a bigger triangle in place. All right, so this is about S&P 500 trading, completed stock market versus moment of truth as the earnings cycle is now beginning. This article is written by Sue Chang for Market Watch. Okay, I hope you have liked the video and learned something from it, and we put it to use to improve your S&P 500 and stock trading in general. Okay, if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. We are the GSTW24 traders talking about S&P 500 trading, completed stock market versus moment of truth. To summarize this video, the S&P 500 is confined in a triangle. One cannot discount it. It means that anything is possible. It can break above it if the earnings happen to be very, very bullish, and it can break below it if the earnings, okay, happen to be bearish. This is the moment of truth that the stock market is facing, and when we are talking about the market, we are talking about the S&P 500. Happy trading to you all, and speak to you soon. Thank you.